a copy of this for you to watch at any time. We're going to make sure this is one heck of a powerful webinar that you can use, in your pocket and keep with you. We wanted to make sure that since we're starting 2025, you guys are getting very, very deep into the MPA. I want to make sure that you guys have something very, very valuable that we do. Now, some of you guys who are in this room, have you guys been to my webinars before online on YouTube and stuff like that? Have you seen me do a live webinar there? Yeah? Okay, so this is going to be a lot different than that because this is more private. We're going to be interacting with each other. We're going to take pauses. We're going to make sure you understand what I'm saying, and we're going to be going back and forth here and there, while at the same time we want to make sure everything is covered in the time that's allocated. But we're going to do a lot more sort of hands-on experience together, more on the charts and less on the theory side of things. But if something requires me to retrain you guys on the theory side, then we'll jump to a whiteboard quickly, do some drawings, and bring you back to the charts again. Yeah? Make sense? You guys okay with that? But it's important that we cover as much as possible to do that. So, I've got Ryan in here for that specific reason. I wanted to know actually what are some of the questions coming in, because there's like over 150 people in here live right now. It's going to be very difficult to go through all the questions one by one. So I called in Ryan. Ryan, as you guys have probably interacted with him at some point throughout your MPA journey, he handles a lot of the operations within Urban Forex, and he makes sure the customer service is on point, but he's also a trader himself where he understands what kind of questions and confusions that there might be coming to make sure the journey is a little bit as smooth as it can be. Trading is difficult, but as you all know from MPA, it's not hard, it's easy. You got to keep doing that mantra, all right? So Ryan, I'm going to need your help to find out what are some of these questions that these guys have. Let me just say hello to some of these guys. I'm seeing some familiar names. Hi Adil, Hemant, RB, Juan, Asif, Ismaila. Where are you guys all logging in from right now? I saw Nigeria in here. I saw Norway, Kurdistan, Estonia, South Africa, England, India, Kansas, Houston, Malaysia, Arizona, Johannesburg, Abu Dhabi, Puerto Rico, New York City, Venezuela, Philippines. Okay, good. Okay, so we got people from all around the world. So I want to take a moment and thank you guys for taking the time to be here. I know for some of you guys it's very late in the night, some of you guys it's very early in the morning, and some of you guys it's just another day in the office, right? But what we're going to do, we have a lot to cover. We want to make sure your time is not wasted. If required, I will go 5 or 10 minutes over the hour. If I feel that you guys just need a little bit more time, then we'll go over by 5 or 10 minutes. So please allocate for that. Make sure everything is, you're ready to take notes. Everything is recorded. In case you don't want to take notes, you just want to focus and make sure you're paying attention. But if you interact with me, you take notes, you do whatever you can to get involved as much as you can, then you'll learn a lot faster. Now, to enhance further, when I go into the teaching part of things, I'm going to make sure the chat that you're typing comes to only me and Ryan. It won't be publicly visible to everybody unless I ask a public question that I want everyone's response, and I want you guys to see the responses. Then I can turn it back on. Yeah? So don't feel shy or anything like that. Just jump in and ask questions. In case you are still shy or reserved on the question you want to ask, you can always email us at info@urbanforex.com. Just put in the subject line that private MPA webinar and with today's date, so we know what you're referring to. Sadiq, yes, the webinar is recorded, so don't worry about that. Okay, the replay, James, you'll be notified on when the replay with us. So keep track of your emails. We'll be sending out emails once the webinar is done. And some of you guys kept asking questions about, are we going to hand out promotions like we used to back in the day when I personally used to do the webinars? So we made an exception for today's webinar, but we'll get into that towards the end. I'll let you guys know towards the end. I did have the discussion with the team. We got everything organized to make sure you have the best jump start into the year as much as you can. Yeah? Okay. All good? Shall we begin? Ryan, shall we begin? You're okay from your side? Okay, people are already asking questions. Naveen, how do I know what session to trade? Okay, there we go. All right, let's begin. So Ryan, what I want to know is, I want to know what is some of the most common questions or more intense, like repetitive questions that are coming in. You're in the emails side, you're in the support side. You've seen, for the last several years, you've seen more than I have seen now, as I'm only interacting with everybody through webinars and at the elite level, but at the MPA level, you've interacted with a lot of these people. So I want to know, what kind of difficulties are they going through? What stuff do they not understand? What they do understand, and where I can help.
Yeah. Okay. So from what I've seen, right, many of our students, they've got a good grasp on these concepts like your territories and understanding who the guy who started it was. One thing I see though is around breaches, such as
Breaches.
when it's not super clear, how do they know if they should trust it or not?
You mean like if a breach slowly pokes out and then it's like, do I call that a breach, or is it not a breach? Like, is it that vagueness of that, you mean?
Yeah, exactly. Yeah.
Okay.
Sometimes it just happens and it's super clear and there's no doubt in your mind, but then occasionally, yeah, it's just not super clear what we're looking at here.
Okay. So breaches and false breaches, basically. All right. Okay. What else we got?
And also to do with the fundamentals, right? This is something, there's often confusion when something happens around the news that's a bit unexpected. So for example, if the news, let's say the news was expected to be positive, it came out positive, but then the breach completely went the other way.
Yeah.
Now,
Yeah.
I see some students get completely frozen, unsure what to do now.
Yeah.
So is there
I've
anything
actually.
you can do to provide some clarity there?
Yeah. Okay. I've seen questions like that myself personally in the comments of inside the MPA. Any of you guys in here also have that issue as well, where the news is coming out, the numbers were very positive. Why is the market actually going down? That doesn't make any sense. Or it wasn't, stronger than, it wasn't that. What's that word? It wasn't that much of a shock. Why is it moving so much? I didn't expect it to move that much. Okay, you guys have those type of experiences where it's like, what's going on? Okay, all right, so we'll talk about that too. I see Neeraj is saying V formation and test also. I'm going to squeeze that in there into the stuff you're also mentioning, because I think the V formation test comes on basically towards the end part, which is how do I get ready to trade. All right, I'll just throw that in here as well. So Neeraj, that question, I'll write it down as well. V formation and test. Okay, sorry, Ryan. What else we got? Yeah.
That goes around. Well, a very common one is always around the pullbacks, right? Because they don't always look the same, right? Sometimes we'll have the nice, slow, clear, structured pullback that we like. Other times it comes in super aggressive.
Yeah.
And the cool thing is I've seen you explain this in a way to your one-on-one student that makes it very, very simple for them.
Okay.
And I'm wondering if you can do something like that here.
Okay. So pullbacks and so quality and well, okay. I think it's the understanding of the quality of a pullback. What's the main purpose of this? Is when does it end? Is that the part that's confusing?
Basically, yeah. How do I know my pullback is finished and we're now on the other side ready to go?
Okay. All right. So what I've written down so far, I said breaches. How do I identify if the breach is real or not? Fundamentals, the different types of news variations. That's a little bit confusing. Pullbacks, the quality of the pullbacks. How do I know it comes to an end? And then one of the questions I saw was some clarity on V formation and test. Is that correct? Was there anything else?
Yes, spot on. And I think Gareth just mentioned, especially the money spot. So, right, because we're looking for that moment when the pullback's over, and then we can get ready. So
The money's
yeah.
okay. So basically, the entire MPA you guys want me to cover here. Like, okay, money spot. Okay, I'll write that down as well. Money spot. All right. Okay. Okay. Yeah. One of the things, what I'll do now is I'll now turn the chat into where you're able to chat with just the host. Okay. So that way now you guys can begin to interact with me personally. Okay. All right. So your messages will not be seen by anybody else going forward. All right. Yeah. So far so good. Okay. One of you guys are saying, when do we really need to trade as HEs? Okay, good. So let's get started. All right, Ryan, thank you for the questions. I'll take over from here, and then we'll go into all of these details. Hopefully we can cover all this in the next hour, because I also want to show them a little bit, some extra techniques that they're not going to be in the MPA. And, you know, if we have time, we can go over that as well. Yeah?
You're gonna love that. Awesome. Have fun, everyone.
Cool, cool. All right. Okay, guys, so we're going to do a quick recap. I want to test your knowledge to see how much you understand, how much you're on point, and how much did you learn from these videos, so I know how much further tweaking is required. Okay, what I'm going to do is I'm going to open up the whiteboard real quick. Where is my whiteboard? Okay. All right, here we go. We got the whiteboard open. I'm going to draw a circle. Please let me know if you guys can see the circle. Okay, yeah, you guys see the circle. Perfect. Perfect. Okay, so let's start from the top. Breaches. How do we know about breaches? Okay, this is one of them, right? Breaches. Now, you guys obviously know why breaches are important, right? So before we can get into all of these little subcategories and stuff like that, so let's take a step back and be like, what's MPA? What is this thing? Okay, why are we doing cheese? Okay, why are we learning that particular edge? Okay, there's thousands of edges on the market. You can trade this way, you can trade that way, but why this one? This one gives you the highest chance of you basically putting yourself in a position where the odds increase in your favor. Okay, so what's a cheese? In your own language, try to explain to me what a cheese is. What do you think a cheese is? Okay? And don't say that yellow slice that goes inside my burger. Not that. Okay, it's a slice. It's a small portion. When the market is hot, good. Tasty, healthy food. Okay. Catching a small slice of a move. Okay, so all of you guys said catching a small slice of a move, which means for you to catch a slice, it's a slice of a move. That means you have to have a move ongoing. So the entire MPA works on the premise of let's get the move started, and then we'll do this technical analysis technique where we go in and we grab a piece and we walk away. Okay? So the very core of this is we need to know when it's moving. Only then can we go and grab a slice. So far so good. Did that make sense to you guys? Okay, so that's the building blocks of the MPA 2.0. Is someone start the party, and if someone has started the party, I will then go in and figure it out by using my skills and stuff that I've learned at MPA 2.0 to take out a little slither of gains for myself. Okay, so breaches. So what are breaches? Let's start with this. This is number one. Okay, so I'm going to give you guys a technical analysis trick here, okay? I want you guys to look at it this way. So many times you're looking at, okay, I want to see what is contained within Asia, right? You guys are doing that part where it's like, okay, however the range looks, you're like, that's the highest point of Asia, that's the lowest point of Asia. And a breach is something where it's like, ooh, look at what it did at London, and that happened because of a news event. This is hot, right? So far, so good. And then we would classify that as that's a breach. Okay, it's on the move, it's going. But sometimes it does this, and that's like, I thought it was a breach. Can I not trust it? Why is it doing that? Okay, so this is the area where I'm assuming where the confusion comes in is, how do I know to trust it or not to trust it? And how do I stay prepared with it? Okay, what's the rules? Once a breach happens, what are you supposed to technically do? Okay, if a breach happens, what's the next step? Let's talk about that first. Okay, you wait for a pullback, and once the pullback is done, you want to do the buy. Okay, James is saying test the support. Okay, so if a breach happens, where am I expecting the pullback to come into? Okay, where am I expecting the pullback to come into? The SNR area, near SNR area. Okay, good. Guys, I'm going to turn the chat back on so you guys can see everyone's chat now. Okay, because these are some common questions. I want you guys to see how everyone's responding. Okay, SNR level. Okay, this is where I want you to get smart about this. You guys know the different types of markets that there is, right? In terms of the structure of the market. What are the three different types? What are the three different types of markets? Okay, you have channel, good. You have range, and you have trend. Excellent, good job. Okay, when you have a breach that looks like this, and it runs out of momentum, what I want you to do is I want you to take whatever area you have from where the range has started, for example. Let's say the range has started from this moment, and it's been going on until this moment where it looks like, is that a breach? I hope it's not a probe. I hope it's not just a fake out. How do I know? Well, if it happened with a news event, and if it happened with power, okay, where it's like, oh, that happened right at a specific time of the market was open and then moved, but I just don't know if it's strong enough. This is what you're going to do. You're going to measure that thing, and you're going to say, how big of a breach do I have versus how big is my range itself? So is it bigger or smaller than that? Is the breach bigger or smaller? It's smaller. Okay, so an important thing to understand, if it's smaller, it doesn't mean the breach is necessarily fake. It just means don't operate and wait for it at the SNR here, because this might be a channel being developed, which means let the price come in deeper, and you want to try from a deeper price to try to take it back up. Does that make sense? So this will help you sort of understand that I don't want to get caught into thinking I buy it here, and when that buy doesn't work, it comes back down, and I'm like, oh no, and then I miss this completely altogether. Okay, so you just want to measure what pops out versus where it popped out from. You want to measure those two. Now, let's do it the other way. Okay. All right. If it breaches like this, how big is it? And it starts to turn a little bit. How big has the breach happened versus the range itself? Okay. Then this is more, it's much more bigger. It's more like a trend. Then we become more reliant on, most likely we're going to be dealing with an SNR type of thing. So that's one way to look at it. That's pure technical. The other way to look at it is, in your mind, is nobody likes a small 10% discount, right? Nobody likes a small 5-10% discount and call that a deal. That's not really a deal, right? So you want to make sure the deals are generally 30, 50, 40, you know, something more than 30%. That's generally what's considered, that's a good enough deal. Get in. Because that decreases your chances of being wrong. So when something goes up, and if you buy here, the chances of you being wrong is so high because your requirement is it to go higher. But if it pulls back a bit, you buy it and it pulls back, oof. But the lower it pulls back, and wherever you buy it from, your chances of being wrong is slimmer because more people are looking to buy at a good price. There's more people coming after a good price. That makes sense? So logically speaking, a pullback is the best thing to do. And if it's deeper than 30%, it's even better. Because more people will support your idea of, oh, that's a good deal, I will also buy. And that creates a strong push from the bottom. Okay. This should help you guys with the breaches a little bit to understand, are we dealing with a probe or what's going on? Okay. Now, I'm going to give you guys a little technique that we teach the guys in ITP. I want you guys to do this as much as you can. So let's say this is Euro USD, right? Let's say this is Euro USD. Just do one thing extra. Okay, this does wonders for the students at the ITP level. I want you to find out what caused this thing. Let's say the news event came out and it was a Euro news, right? Once you figure out what caused this event, go look at all the euros. Euro USD, Euro CAD, Euro New Zealand, Euro Aussie, Euro Yen. Go look at all the euros and find out, did they all burst in a certain area? This will increase your odds dramatically because your big boy is not just breaching on this level, it's breaching at a massive level. It's moving across the board. This increases your chances of being right 10 times, 100 times. Okay, so you want the breach to happen across multiple pairs of that currency. Okay, if you can't find it doing in all the euros, like, what happened? Is it on the dollar? And then you look across the dollars like, oh, it happened on the dollar. Okay, so the focus goes on to, it's all dollar based. When you do this, you can pick better. Okay, you can pick better. Okay, this is a really bad handwriting. It looks like Rick Better, but okay. You can pick better, okay? What that means is these ones none of us like, right? The shallow ones where it's just a small breakout. But let's say the move is coming in from Euro and you look at Euro, this is Euro USD, and you're like, oh, I'm not sure if that looks nice. But Euro CAD, on the other hand, has done something like this. The breach is like that. Fantastic, that's stronger. Go do that one. Right? We want a move that's strong enough so we can take a slice from it. But you want a good move. A strong move means they want it badly. Okay? That means people are willing to pay more. They want it badly. And that's what we want. We want them to be desperate. Okay? Does that make sense? So hopefully you can use this to hone in on your breaches. So a little break above, not so good. Okay, and if that happens, instead of ignoring it, just assume by drawing a line like that, saying, oh, I'll draw a parallel line on the bottom. I'm expecting prices to come deeper, and if I have to try, I will try from these prices, not the SNR. Not the SNR. Good? Makes sense? All good on that one? Perfect. Perfect. Okay. Now, moving forward. Okay, so breaches, that will help you to understand which one is false, and not necessarily all of them are false. It just gives you a better entry price sometimes. Okay, fundamentals. This is a giant blurb since the longest time. Let's talk about the fundamental part a little bit. Okay, all of you guys that here have an issue with fundamentals at some point where you'll see some discrepancies where it's like, what is going on? Why is this really weird? Now, think about it this way. Since COVID has happened, right? And the market's gone berserk after COVID, and then lots of money has been printed and stuff. Now, without me going too much into details of all of that stuff to understand, just think of it this way. If, because of COVID, your country took a huge hit, right? It took a huge hit, and your economy went down, 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 down. Okay, which means it's bad. Just think of it simple like that. It's bad. Now, the expectation from here, when it's bad, they say 100 million is the expectation. I'm just giving a random number. And the number that comes out is 110 million. Now, that's good news for the number itself, But in the context of how big it dropped since Corona, they're still struggling. That's why the market can still go negative. So this causes a confusion of like, well, then how do I read my economic calendars? The shortcut way to do it is just take a step back from reading all the fine print details and saying, my job is to see when a news event is happening, how much did it move the market? Up or down, not my concern. I want to see, did it move? Did we have a strong breach? If yes, that means the big boys have decided. And we know why that movement has happened. Does that make sense? So if we say there's NFP and it moves 5 pips, looks like whatever that information was, the big boys don't like it. Okay, I don't like it. I don't need to sit here and try to force myself to give it an opinion because I didn't study economics to that level. So just to keep it very simple is when the news comes out, all you need to do is what time is the news? And then you have a look at it and saying, could this be something that can cause a very strong breach? And if it does, we're not trading the breach anyways. We're trading the pullback after that. So it doesn't really matter for us. We just want to know, can it move something? Okay? So keep your fundamentals and news as simple as you can by simply saying, did I get an activity out of this event? If yes, we're good. We're golden. That's all we need. Because whether we buy or sell, it doesn't matter to us, right? We just want to know, did we have a breach properly this way or that way so we can get prepared? Good? Good? Does that help make things a lot simpler, at least from the fundamental side of things? Rather than going into trying to fix it and trying to get you a more appropriate COVID-proof answer kind of thing? You see what I mean? Okay. All right. So that should help you guys very quickly use that little shortcut. Pullbacks. Okay, let's talk about pullbacks real quick here. Pullback. Okay, first I need to test your knowledge on pullbacks before I understand. What's a pullback, number one, and why is that important? Try to type in your thing. I'll turn it back to, yeah. I'll leave the chat still open. Okay, everyone can see the chat. What's the pullback? In your own language, try to let me know what's a pullback. Okay, some of you guys are saying better price. Very good. You guys know how to deal with the pullback already. Okay, I see some of you guys saying a rubber band man. Excellent. Whether you use rubber band man or you use digestion, whatever example you use to make it understandable quickly and easy,
it's
you can do it
10:30.
that way. Okay, so it's a discount coming in. Okay, so let's do it this way. If the market is going upwards, let's say we have a breach, right? We got a breach going and the market goes up. We're now interested in, come on, this is hot. The news just released. I'm looking for a pullback to start to come in so I can get ready to buy from my nearest SNR, which might be there. Now, that SNR is a reference. It's not set in stone. It's a reference, is thereabouts. We don't know when the larger player will reactivate. What we're interested in is he coming back? Okay? So when your pullback comes in, and you're down on your 15 or 5 minutes looking for that pullback to come in because you want to be closer to the activity, not further. So if you have a breach and you're up on the 60 minutes or 4 hours, you're too far away from the activity. You want to be as close to the activity as you can so you can ride the momentum while it's still hot. So, but you need a good deal. So you're strict and you say, I don't want this price. I don't care what you do. Keep going. I don't care. But I don't want to pay those crazy prices. Okay? And then it goes even higher and you're like, don't care. Goes even higher. Don't care. Then the pullback starts coming in. Now, what you're measuring in the pullbacks, I'm going to give you some tips and tricks to say, rather than saying the rubber band man is doing leg, some of you guys trained as this is leg 1, this is leg 2, and then generally at leg 3, after that you want to get a V formation and so on and so forth. Tell me, for you guys, tell me what you guys do when you guys deal with the pullback. Let me hear, what is your approach to a pullback? How do you guys look at it? What's your go-to sort of thing? Like, what makes you look at a pullback? Wait for buyers, wait for a range, how fast it goes down, momentum slowing down, wait for the big boys to come back. Okay, all right, so look at this part, okay? I'm gonna give you guys a little technique here. And I want you to, this technique that I'm about to give you right now, I want you to always apply this. No conditions of vagueness. This is applied every single time, no matter what condition of the market. You have to look at it this way. Ready? Okay, let's do this. Let me show you. Okay, some of you guys were confused about the leg 1, 2, or forget about that. Don't even worry about that. Well, it's not important. Okay. When you have a movement, let's say the market goes from this price to this price. Okay? If someone is selling, when prices go upwards to that much, let's say all of you guys are the seller, okay? All of you guys are the seller. When prices go up this much, are you concerned or are you looking to add more money? Does it make you panic? No. No panic whatsoever, right? Keep that in mind. Prices are here. Does that make you panic? Okay, some of you guys saying no, a little. How about now? Does that make you panic? Okay, now notice how there's a lot of yeses starting to come in now. You all can see the chat, right? A lot of things have turned into yeses. This portion right here that I'm about to draw, the upper 30% of the move is sort of like your last chance. Is your last chance. Okay, I'm going to explain this very slowly. It's super easy to understand, but if it doesn't make sense, you let me know and be like, hey, brown man, I know it's easy for you. Explain it again. And I'll explain it again. Don't worry. Okay. All right, now here we go. When a move comes down, for you to be able to go through that movement, you need to get rid of the people who are selling. Okay? So when a movement, let's say a movement comes up very sharply, don't call that my buyer is back. Remember, at what point does this seller start freaking out? Is when his deep price, we're going to call this upper 30%, a deep price, when his deep price attempt doesn't work. So if it gets up to here and in this area the cells don't work properly, now he's really scared. Wouldn't all of you guys be scared? If all of us were selling, the price came up that aggressively, and we're like, last chance, and then it doesn't go back down, now we're sweating, right? We're super concerned. And if it goes up from there, how do we feel? We're out. Game over. Even if it goes up and we never kill the guy who started it, you know and I know that guy must have panicked. He's out. He's not going to play anymore. So what we're looking for in a pullback is to kill the engine first, the engine that's coming down. Whether we want to call that a rubber band man, we want to call that digestion, whatever that discount thing is coming down, we want to kill that energy. We don't want it to keep coming down. So as it's coming down, how do you feel? Are they good? Are they happy to do the pullback? Yeah, they're good. We are like, come on, keep giving me the discount, but I don't know if it's come to an end, because if I buy here, I know I have a good price, but I need to use a stop loss. If I put a stop loss and it goes down more, I'm dead. So because I have a stop loss, I can't really just trade because it's a 20% discount. Investors can, because they'll just get in, oh, 20% discount, I'll buy it. Because they're not um, their condition is not sensitive to a stop loss. We are. We're traders. We have the time. We're sitting there, so we're watching it, so we can make more money out of it. Okay. Then they do this. The next piece is buyers come in. Okay, remember, it's still in seller's territory. Right there. Then it comes down. How did it do compared to before? Is it lesser or stronger? It's lesser, okay. But how was the speed of how it came down? So the size is same, but the speed seems to be very quick. Look at the speed on the way up. Choppy, 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 choppy. And if that's 15-minute candles, man, that takes long. But on the way down, 2 candles or something like that. Wow, that's quick. But it's done less in amount. It's done less. That's fine. If it has a new low, I'm interested in that upper 30%. I gotta finish messing with that guy first before I say my big boy is back. So far, so good? So it goes down, and you go bam, right here. Now, prices go up a little bit, and then they come down choppy. They come down choppy, 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 and then it does this. Do we have a V formation, gentlemen? I know that's the next question you guys have. Do we have a V formation? Some of you guys saying yes, some of you guys saying no, some of you guys saying not yet. This part is where I want you to become master animals with this thing. You want to be so good at this thing where you're like, I have no doubt in my mind the seller is gone. Whose territory are we in right now? On this pullback, have we jumped into the buyer's territory yet? No. How about this? I'm going to give you guys something I teach the guys in the ITP level, okay? This is going to be your 2025 present for you guys. Okay. Remember, what's the area that I'm watching all the time? What percentage? The upper 30%. Good. If the price goes like this, and it is basically gone higher than this, right? He's gone above the guy who started it. I still will say, I don't like it. Now, wait a minute. Why is that? Okay, good. Even Jeff is like, what are you talking about? But that's a V formation. We just killed the guy. Or it's even considered lopsided V formation. What's going on? What's going on? Okay, let's talk about this in details and focus what I'm about to say very carefully here. Okay, if they don't try at the upper 30%, it means they haven't had a chance to sweat. If you really want to remove the other party, you need to let them experience pain, and then that pain makes them take a decision. If they don't experience pain but a shock, nothing's going to happen. What happens when a deer is shocked in front of the headlights? What action does he take? When there's an animal that jumps in front of a car and then he sees a car coming, what action do they take? Nothing. They pause. They get frozen. When you're in shock, you don't know what to do. But when there's pain, the exit comes faster. Okay, so let's talk about this. So if prices go up to here, and then from the upper 30%, I see some kind of action attempt. Now, if I do the same thing, slight higher high from the guy who started it, I would say that's a V formation I can stand behind. I like that. Now, if I get that V formation to stand behind, what's the next step you guys are thinking? What should I do next if I get a V formation? Test. What do I test? Where am I testing? Okay, they're saying test the range. Seller's last attempt, the guy who started it. Okay, good. However you guys are coming to these answers, that's very good. What you're basically saying is, even after doing all of this, you're saying, prove it to me one last time. Prove it to me. What that means is, once he makes that movement slightly higher after suffering at the 30% level, now we know it's legit. It's the real deal. We need to find a way to get in because the big boy is back. He's not back here. He's back here and he's gone. Now it's a one-sided market all over again. It's one-sided. The sellers are gone and the buyer is back. That's the market we like. Anything else we do prior to it is too early. We're going to get in trouble. We love it when it becomes one-sided all over again. Our chances of making money become so much easier. So far so good? Everyone with me? I'm going to draw 2 or 3 more different types of this thing so you guys have practices. Okay, you guys are going to do this now. There's a movement that goes down and your objective is to buy. We're going to do one in the sell side that you want to buy, and we're going to do one in the buy side that you're trying to sell. Okay? All right, Hemant, you're saying 30%. Explain it again. Okay, I'll go over that one more time here. So this example will get it for you guys. If I want to buy whatever is coming down, what must I accomplish? Okay, you guys type it in. What must I accomplish if I want to do this? That's the guy who started it. I have to get through him, right? If I get through him, that means the seller is dead. That's the main thing. I need to finish off the sellers. So if you and I were all sellers, let's say, and we see this, do we get happy? We're happy. Hey, we're selling and we get a pullback. We can sell more. We can make more money. We made money already. We can make money again. So we're happy to do that. But once it comes up like this, it goes boing. Deer in the headlights. We're like, what just happened? Was that a news? Okay, if it comes down, maybe I'll close it. Does that mindset come with you sometimes? Where it jumps up like, oh, what? Okay, if it comes down, I'll close it. Have you guys experienced that before? Everybody does that. And what happens next when it comes down? If it comes down, oh, thank God. Do they close it? They won't close it. They're going to hold on. They're going to like, oh, if it's working, yeah, of course, I knew it's going to work. So let's just hold on now. So a movement up like that doesn't get rid of the sellers. It doesn't get rid of the sellers. So you need to know this. If it doesn't get rid of the sellers, then how can I trust this to be my V formation? Not a good quality V formation. I don't like it. Okay, so I'm gonna do it again. So here's another one. Prices are going down. It goes comes down, jumps up, and then it comes down. How do you think that guy feels when he tried it from his 30%? How do you think that guy feels when he tried it from a deeper price? He's still relieved, he's good. What if the price comes back up to 30%? Do you think he quit? Good, good. I'm very happy you guys are saying no to this. So even this is not a V formation yet. Don't trust it. You want this guy to sweat. But in this area, if he does this, how do you think he feels? How do you think he feels? He's worried. That's your money spot. That's your money spot. If the trend is upwards from whatever news event this is, like if your trend is upwards, then the money spot, we say the big boy is always going to generally win, right? We don't enter these things. We're not interested in that. we're interested in is, oh, he's dead. Come on, give me a test and I'm in. When that test comes, it better start going back up, and then I'll enter whatever prices I can get on its way back up. Notice where I'm buying. I'm not buying that. Okay, we're not trying to get into a fashion show and saying, look at me, look what I did. We're looking for, if I put down $10,000, can I make it $20,000, knowing it's going to become 20, rather than if I put down $10,000, am I going to lose all my nails because I'm so scared and I'm biting my nails all the time? You want to increase your chances of being right as much as possible, as much as possible. Okay, so far so good, making sense. Shall we do a sell side, a buy side example? Okay. All right, let's do the flip side example, okay? This, what I'm telling you, you need to use this all the time, all the time. Okay, Daljit Singh, you're saying, let's do this on the charts. Are you guys okay if we go into the charts to do this? Because I think you guys get the theory. Let's do it on a chart so you guys can see it there. Okay, let me take you to the charts. So it looks like we're gonna go over the time by 10 minutes. That's okay with you guys? Okay, I hope you guys are fine with that. We're gonna go over a bit. Okay, perfect. All right, let me open up this thing. What just happened here? Let's go to Euro USD, let's say. Okay, let's turn this into a 60. All right. Now, okay, this is a example of when someone looks at this movement and says, is that a V formation? Because it looks like a V, right? It looks like a V. It looks like it's also going above these guys. It's going above this guy who started it, that guy who started it, this guy who is going above everything. But where is the processing at the 30% of this guy, or 30% of that guy, or 30% of that? There is no processing. So he's never freaked out. Okay, you want to see that stuff happen before you can actually classify it as it's leaving. Okay, let me find you an example where it does do that, where you can classify it. Okay. All right, so this is going to be a similar thing, like you'll have a cheese trade like this. Markets will give you a movement that will be caused by something, and you will be then looking at, give me a pullback so I can entertain it. Pullback comes in, that's the guy who started it. Comes down, goes up again, that's the guy who started it, stops there. If you want to sell, what must happen? If this is the guy who started it, and if you want to sell, what must you see? Kill of the guy who started. So if the price comes down here, is that my V formation? Did the buyers quit? Good, good. How do we know the buyers are going to quit? What must we do to them? Into that 30% zone. So the closer to the bottom 30% is their last attempt. If it struggles there and they don't do anything and then it goes down, they're dead. So not only are you watching the speed and momentum, you're like, it's going up, it's going up, it's going up. Okay, guy who started it, deep price, off he goes again. Does he feel worried when it goes off on the way up? Is he worried? The seller? The buyer, is he worried? No. So for us to do a sell, we know he's not worried. Stand back. Not yet. Not yet. So comes back down to the deep price. Do we call this a V formation? Good. It looks like a V formation because it has a decoration of a V formation, but the logic is illogical to judge it quickly and saying the buyer is dead. Not yet. He's here at a deep price. They're worried, and then it follows through. Are they concerned now? Nope. Then it comes again to that same deep price, and it goes 1 candle hold, 2 candle hold, no performance. Are they worried? What happens after that? A drop. This is where you put the line and saying, this whole thing, complete. I can tell you for sure, complete. They're dead. Pullback is complete. Does this help everybody understand the process of how do you get rid of a pullback? This will make life a little bit easier for you guys to say, we needed to slow down, that's for sure. We needed to get to an SNR, that's for sure. But this is an SNR, and we will easily call this a V formation. We don't want to do that. Jeff Chan, you're saying for now, yes, I don't know if I will remember it. Well, that's why I recorded this webinar. So you will always remember it. And you watch it again and again until it becomes second nature. Yeah? Anyone here having, anyone here confused at the moment, and anyone here who's having breakthroughs and having aha moments like, that's it, that's what I wanted. Okay? All right, okay, some of you guys saying one more time. Okay, let's do one more. Let's do another one. This is now buy side, okay? There's a strong movement upwards. Let's assume that's Asia. You have your breach, it goes up, and you're like, I'm not gonna buy up there. Are you crazy? Give me a discount, right? So you're waiting for the discount to come in. You have some levels. You're like, if I draw my line there, that could be a level. If I draw my line here, that could be a level. These are all reference points, right? More or less approximately this area. The discount comes in, goes up. The discount comes in till here, and then it goes up so quickly from this price, and it stops there. Is that my V formation? Should I buy it? Should I buy it? Just because it's fast, don't do it. Just always mark the guy who started it. You guys know your territories. And saying, I want him to try at the upper threshold. Didn't happen, right? Then they go lower. Here's the upper threshold. And it went down again. So did they worry at the upper threshold? Nope. So they're not concerned, which means you're saying they want to see this area bother them. Then it goes up very strong to that area. How do you think they feel of this area when that candle comes up and it's in their deep 30% area? How do you think they feel? Worried. They're starting to stress. Okay? But it happens so quickly. It's a panic. How about now? I don't like it, man. I don't like it. I don't like it. And when this next red bar comes up, they're done. Now they're done. Did that make sense? So you're not going to judge where is the end of this by simply saying, this looks like a V. No, 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 no. This looks like a V. No, no, no. This looks like a V. No, 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 no. Don't do it like that, because then you'll have 100 Vs. Everything will look like a V formation because it looks like that design, right? And I can get that, because when I used to first do this back in the day, everything looks like a V formation to me, but it's the concept of what are they feeling? How do I get rid of them? And how do I make it back to one-sided market again? And that's how I can trust it, right? Mavis is saying 100 Vs. Do you guys also have that feeling of, I see Vs everywhere, but I don't know which one to trust? Okay, so once you get this, then you go into your next part of if I get that confirmation that it's going through, then you can go down that one time frame and saying, show me a test that's going to hold and reverse back, because that's the one I want to get in on. Okay, and that will open up the doors to speed up the process rather than buying somewhere here and saying, constantly worrying, is it working, is it not working, is it working, is it not working? Well, it's not working because this side is not dead yet. You got to get rid of that side fully. Making sense? Okay, good, 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 good. Okay, so this whole idea, what we've done is we've automatically talked about the V formation test, but also at the same time incorporated where the money spot comes in. Your money spot is best at the 30% of that last guy. You guys all understand, right? When I talk about the last territory, the 30% of that is what you want to sort of constantly test all the time. Yeah? Okay. Here's a pop quiz for you guys. If you have a movement like this, okay? Pop quiz here for you. Okay, just let me know if you guys can see my circle. Okay. Good. If you have a movement like this that goes up and your objective is you're trying to sell, okay? But you're like, I'm only going to sell when these buyers are done. And then you see a V formation that's lopsided. It does this. Prepare for selling? Good. You got it. You got it. So the design itself is not enough. It's the understanding of, I think they're just in shock. They're not exited yet. What if it does this? Prepared. Good. This? Okay, that's it. So this is the moment where you say, I think that buyer's gone now. He panicked in this deep price of 30%. He didn't worry so much here because he was in shock. But this made him start sweating. Uh-oh, it's not recovering. Uh-oh, it's not recovering. Ah, crap. That's it. He's out. He's gonna exit. Especially if this comes down fast, he's gonna get scared. It's gonna force him to exit because there was enough slow pain to make his brain come up with a plan. Okay, if it doesn't go up, I'm gonna exit. If it does this, I'm gonna do that. There's time for his brain to come up with some kind of a scenario to do something. So instead of calling this your V formation, it's this little guy. That's your V formation. Make sense? Okay, good, good, good. So all of you guys did that one really well. Excellent, excellent. Okay, I wanted to give you guys some tricks from the ITP level, right? As I was telling you guys. So one of the things that you must do, you know, like I know the ITP folks are gonna kill me on this, but some of you guys might be coming into the ITP because you're about to graduate from your MPA. But the ITP thing to understand is do your correlation, the stuff I've been talking about. Do your correlation, which means if you have a breach on your Euro USD, go check all the euros. Okay? If nothing is the same looking, then go check all the dollars. And if they're same looking, then it's a dollar movement. If you have that as your breach, that's very powerful. Very, very powerful. Your chances of being correct has skyrocketed now. Mikhail, you're saying on both time frames, whenever the price moves, it's moving on every time frame. So if the price right now has gone to $1.20, it's $1.20 on every time frame. Yeah? So that should help. Okay, now in the beginning of this webinar, I told you guys that we did listen to some of you guys. Some of you guys had requested to know what's the difference between MPA and ITP? Do any of you guys in this room know the difference between the two? In MPA, what are we focusing on? We're doing cheese, right? We're taking a small slice from the market, right? So I'll explain something here. Let me open up the whiteboard. Okay. Whiteboard is back. Sorry, I just have to keep asking you guys confirmations on this. Okay, it should be back now. Yeah. So in a cheese, we're taking a slice from the market. In ITP, we focus on, we want the whole thing. We want the whole thing. We don't want a slice. What we want is, instead of getting in here, we build our positions down here ahead of time. Okay, we start building our positions there, and here we add. Where everyone from the MPA is just about to get in, we're starting to add size. Okay? And then as MPA is getting out, we're generally scaling out. Okay? This is where the MPA operates, and this is where the ITP operates, in that sort of region. Okay? So the easy thing, but it requires a lot of waiting sometimes, is the cheese trade. You need the markets to be active to do that. Now the Tiljit Singh, yeah, the ITP is the whole burger. You want the whole thing, right? It's how do I capture most of it? How do I make the big bucks? How do I go from taking a cheese, which is like a 1% of the entire move that happened? How do I take 30% of the entire move that happened? How do I capture as much as I can? So that's the whole thing. Now I'm going to be honest with you guys. Was MPA difficult for you so far? Was it hard? Okay. If MPA did not feel hard to you, just remember, at the ITP level, it's going to be a little bit harder than the MPA. A little bit harder. But if everything I've said up until now made sense to you, and you're not like, I don't know what he's talking about, I'm so confused. If it's making sense to you, the ITP is basically the next level up. The videos can be a little bit longer, okay, because we go into deep details of the technical analysis, and we go into the pinpoints of, look at exactly how you need to do this. Okay, we go into the science of it. So if that's going to be your forte, then as you graduate your MPA and you go into ITP, you'll notice a massive difference in your performance. So you'll have that huge jump. Now, as I promised at the beginning of the webinar, some of you guys had asked about the ITPs and saying, Naveen, when you come in and you do these webinars, you used to give promotions. Are we going to get that again? Since it's the beginning of the year, we did decide that we're going to give out 50% discount to the ITP. Okay, so that brings down the price all the way down to $1,250. Payment plans are available on that stuff, but it's only going to be available to the first 20 people from this webinar. Okay, it's going to be available to the first 20 people. The coupon code has already been applied, they've told me, and it's available on urbanforex.com/start2025. Let me try to write this down in the chat.